Bang! And just like that, I'll show you how I found this trade and executed on it. So this trade, first of all, was taken on NQ. Coming into market open right here, we see it come down and sweep out all these pre-market lows, right? And it also formed SMT by doing so. So we see that lower low, that sweep. And then we look on ES right here is making a higher low. So we see the SMT ski, we see the sweep of liquidity. Let's drop down to the 1 minute so you get a better picture of what's going on. Okay, so market opens right here, trade up, we trade down, get a sweep of this clean liquidity right here. We have a fair value gap. We inverse that fair value gap. So once this happened, I was looking for trades within this imbalance right here. So I just had this marked out. Um, it never did come back down into this level. So I never took this trade. Um, we can get rid of that. So after that, we see this run up, push past these highs. ES, um, as you can see, was really running. I kind of didn't want that to happen, and I almost didn't take a trade because of this. But looking on the 5 minute, where are we at? We see this breakup of here. And then we see these red candles, right? And so most people would think, oh, it grabbed liquidity. It could be reversing, but no, there was no real momentum. As you can see, there's no real um, fair value gaps or anything of that nature. But we do see it come down. Bodies of these candles respect this first fair value gap, but it dipped into this one. So when I saw that, I dropped down to the 1 minute, and I was just being patient, to see how far it went. It went to where I was okay getting in the trade. As you can see, it was in the second um 5 minute candles volume imbalance. Not volume imbalance, fair value gap. So right after this wick, I just went ahead and got in because I decided I'm not gonna miss the entry. I'm not gonna wait for it to come back all the way down here. And if it did, I would just get in again. And if I did get in again, my stops would either be below this candle right here or below this candle. Now, after I got in, as you can see, it just marched up. I personally took profits at these highs just because I didn't know what kind of day we were going to have. And I did lose 2 trading days in a row. So just need to get a win on the board. Sometimes, that's all we need. But I was definitely targeting these highs right here in the beginning of the first trade. But well, before I even traded, I was looking at these highs. And the reason I was looking at these highs is because, as you can see, these relatively equal highs. And as you can see, to be relatively equal highs or lows, the high that's further in the past, so this one right here, has to be higher than this high. So as you can see, it goes higher, and then this one is a little bit lower. This is where liquidity lies at. These are relatively equal highs, and you'll see the same thing right here. These relatively equal lows. Like you see, this one is lower than this one. Now, you might think, oh, well, what about this? Don't read into it too much. It's not that deep. As you can see, these are all relatively equal lows. They're all close to each other, and this one is lower than these. Okay? Um, got in that trade, and as you can see, 5 minute candle, or this is 15 minute, and we just see continuously running up. Let's just go to the hourly so you can see how high it went. Now, after you take a profit here, you can take a profit here at this high and at this high. I don't believe there's any, yeah, there is nowhere else to look to take profits. So unless you did a fib like I showed you last video and marked out 20 to 25% above or of this move above this high, which I'm not sure it reached. That's just wasn't the target for today. But as you can see, we did hit a banger. ES ripped as well. as you can see. So main thing to look for, just quick recap. We are always looking for some sort of liquidity grab, right? So we get our liquidity grab. We see a change in market shift after this little mini consolidation. We inverse this first presented fair value gap, and after that, we see market structure shift. And then we're waiting, we're being patient, and we wait for some sort of confluence to get filled. In this case, um, was a fair value gap. As you can see, this one, let me just mark it out for you guys right here. Bodies of the candles respecting it, and we have this one where it just dipped into it. Um, Another thing to keep in mind is don't find all of your confluences on the 1 minute chart. I personally love to look on the 5 minute chart to get a better overall market direction, strength, and trend. The 5 minute chart will show you what is more likely to be the bias for today. Are we having a strong bullish day? Are we having a strong bearish day? Um, that is what the 5 minute does for me. If you're looking at the 1 minute chart goes up and down. As you can see, consolidation. You could just think, oh, this now we're gonna have a big retracement. The 1 minute you can get faked out more if that makes sense. So when you are looking for trades, make sure you always confirm on the 5 minute. Um, eh, because price is fractal. So you want the 5 minute and the 1 minute charts to line up. That's where your best trades are going to come from. As you can see today, absolutely ripped up. And that's all I have for you guys. As long as you guys are doing that, you guys should become profitable. Um, have a good day. Safe trading out there.